Hey guys, what is going on? Welcome back to my Robinhood portfolio. As always, hope you guys had an awesome trading today. And I anticipate you guys did have an awesome trading today. All three major indices way up today. Actually, the best market return since March of this year. And actually, it's been the best pre-election rally in the last 84 years. So something a little bit unique today. Like I said, all three major indices up today. NASDAQ up a whopping 2.37%. The S&P 500 up 2.2%. And the Dow 30 up almost 372 points, 2.08%. So a very good day in the markets today. As you can see in my portfolio, in the green by quite a bit today, $399.84, representing 2.05% of my portfolio, with a little bit extra in after hours trading. And as I scroll through my portfolio, you can see essentially every single stock is in the green. So this is a very broad uptrend in the market. This new stock that split off from Yum Brands, Yum China, ended down a bit here, but if you really think about it, I lost 92 cents on that stock. Otherwise, pretty much green, like I said, throughout my portfolio. A couple stocks on the bottom there, some managed funds look like they're in the red, but again, not by a lot here. PSEC down 31 cents, so that's essentially nothing. This BlackRock Core Bond Trust here again down 16 cents. And I don't hold a lot of capital in either of those two positions, so a very good day in the markets. What I kind of like to do today is talk a little bit about presidential elections and how those sort of factor into market returns. Just read a few articles, very interesting market and presidential elections. For the most part, it seems as though the market really prefers, as you can imagine, an incumbent candidate, that is a candidate seeking a second 4 years. Essentially, the markets don't like a lot of uncertainty. With an incumbent candidate, typically they're also very concerned about being reelected, and to do that, economics is what most people focus on. So typically, a candidate going for their second term really focuses on economic issues over social issues and other things that may be on the forefront of the election cycle. They really try to pass, for the most part, very market-friendly legislation before that election cycle year. So the markets really prefer the incumbent candidate. As well, it seems as though there is a little bit of a difference in the return of the market depending on what year in the election cycle it is. So like I said, election cycles that are more predictable are less volatile, because really the market is anticipating less uncertainty within the market. So the takeaway is uncertainty equals volatility, which equals a really wide range of either markets being up or down, with, for the most part, markets averaging in the negative. That can really be kind of teased out in stats. For example, lowest rate of return is typically in the first year of a 4-year cycle. Different resources kind of gave different numbers for this, but typically average in the first year 3.4% return on money, midterm years 4%, and pre-election years 11.31%. So again, a lot of volatility in the market, and that's with an incumbent candidate. For a presidential candidate that is at the end of a 2-term cycle, so essentially in the 7th year of an 8-year term, markets typically, like I said before, are averaging in the negative, because again, the incumbent candidate can't run. There's going to be a lot of uncertainty, not only in that party, but the opposing party as well. And typically that's when there's going to be the most uncertainty in the market, hence the most volatility, and hence the lowest rate of return. And also, it really depends on the particular politics of the candidate as well. Over the sort of history of the two parties, the Democrats and the Republicans for the most part have been considered the business party. But this year, maybe you can consider that to be a little bit different. Trump has really kind of been outspoken on corporate taxes, especially one of my largest holdings, Ford, down here, saying that basically companies that are trying to move overseas to not only improve costs of operating their business, but also trying to avoid some corporate taxes. As you know, the U.S. has one of the highest corporate tax rates in the world, 39%, versus something like Ireland, it's like 12 to 13%. Trump really says he's going to crack down on these companies. And also candidates that are at least pushing forward some rhetoric about changing Social Security and Medicare. Very, very large expenditures on the U.S. government have a little bit more favorable market response. And as you can imagine, those that have advocated for maybe reducing sort of the regulatory environment in which businesses operate, so it makes their costs lower and they're a little bit more free to go about their business in search of profits. So all those things have a very, very big impact on the markets. This year, as you know, President Obama is the incumbent. He's coming up on the last of his 8 years in office, so a lot of uncertainty. Hillary Clinton, Donald Trump, probably two of the most unpopular candidates in any election cycle, and they're both in the same election. So not only is there a lot of uncertainty because of the things I discussed, an incumbent president coming to the end of an 8-year term, the incumbent candidate not being able to run because of that, and then candidates that have kind of been all over the place with regards to talk on corporate taxes and Social Security, Medicare, the Affordable Care Act. All those things are very large expenditures by the U.S. government and can have large impacts on the market, as well as sort of this talk about maybe increasing the regulatory environment of companies, especially cracking down on inversions, overseas inversions to avoid corporate taxes, and then trying to bring a lot of these companies offshore profits to the U.S., which would then incur taxes on those profits. For example, Apple has billions and billions of cash overseas, basically because they don't want to bring it to the U.S., because if they do, they'll have to essentially pay 39% of that out as taxes, as corporate taxes. So a lot of different things moving in the marketplace. Another interesting stat I found, which was not essentially corroborated in all of the literature I read, but Democrats typically in their first year, the market goes down by 1%. Democrats, it goes up by 4%. But again, there are some other sources saying it's exactly opposite of that. So yeah, I think the biggest thing to take away from the election cycle, especially the days leading up to the actual vote, is markets don't like uncertainty. And this year has been probably one of the more uncertain markets. As you guys know, this last week the markets had an historic downtrend, at least with the S&P, 9 consecutive days. Haven't seen that since 1980. I think a lot of that has to do with uncertainty. Markets are essentially predicting a Hillary Clinton win, and then the FBI came out with all that rhetoric about opening or reopening the investigation about Hillary Clinton's emails. That kind of put the market into a little bit of a sell-off. FBI came out yesterday saying, actually, we are closing the investigation. We've looked at some other emails that were found with Hillary Clinton's personal assistant, and it doesn't really warrant the investigation being open. So they closed that, and today, like I said, one of the largest pre-election returns in the market since in the past 84 years. So since essentially forever that this has happened, and one of the largest market increases for this year since March. So very, very, very good day for the markets. Hopefully you guys have got a piece of that. I certainly did. My portfolio is up 2.05%, pretty much in line with all three major indices. I have a lot of S&P 500 stocks, as well as stocks represented on the Dow, and those both rose 2.08 to 2.2%. So right in line with what my portfolio did today. So yeah, just kind of wanted to talk about how my portfolio did today. Hopefully you guys also made a little bit of money back that was lost over the last 9 days or so. Wanted to talk a little bit about the election cycle and how that factors into election year markets. And then I think tomorrow, the three major indices may be down a bit. I think there's going to be a little bit of uncertainty in the market. I think Hillary Clinton will win. I think that the return, at least the market return, will be good for the next 1 or 2 months until the Fed comes out with, actually less than a month. Fed increases the federal interest rate, which I think they will do. They didn't do this last meeting, but the rhetoric was very strong with they're essentially going to increase it based on what I heard and what some of the articles I've been reading have said. So I think there'll be a little bit of volatility. I think the market will do okay. I think it may dip with the interest rate increasing, having some of that capital kind of flow out of high dividend yielding stocks back into some more traditional bonds and some safer investments with that increased rate. But I think for overall the year, I think it'll still be a good year. And moving into early part of 2017, I think it'll be a buyer's market, to be quite honest. So a little bit of volatility. I think the markets will recover by the end of the year. And like I said, by early next year, I think we'll have some very strong markets out there. So let me know what you guys think. Let me know what you guys did today. Did you make any major moves? I put a little bit more capital into Ford. It really didn't do much for me. So I'm actually sitting at a pretty large position here, $10,106, 872 shares. So yeah, let me know what you guys did today, any big major moves, how your portfolios did, and what you guys think about the markets moving forward, especially tomorrow. You think it's going to kind of be a crazy day, a lot of volatility? Do you think that the market's basically going to kind of do nothing, stay where it's at? Do you think it's going to drop? Do you think it's going to be a marked increase tomorrow with Hillary Clinton winning? Or that's at least what I'm prognosticating at this point. Let me know. So yeah, as always, if you like my videos, feel free to like, share, subscribe if you're not a subscriber. The impetus behind producing these videos is learning about investing, trying to get a little bit of a community together. I don't have a strong or long history with investments. Prior to opening this portfolio in Robinhood here, I basically just funded some mutual funds. So still in the active learning process. If there's anything you can contribute, let me know. If there's anything that I can focus on or help you guys learn as well, let me know. I don't want this to be just a kind of a one-sided or one-way conversation. I want this to be both ways. So again, let me know. With that, I'll end the video and we'll see you next time.